All right, guys. Quick video here on Fibonacci retracements. I'll also go over standard deviations too, probably just a little bit. Right now probably isn't the best time to try to plot some standard deviations. We'll see, just because how shit the market is, honestly, but we'll see. So I'm looking at the 15-minute on MES right now. If you have my kill zone indicator, this is how I will trade this, right? So we have our opening of Asia here. Our first hour is the darker portion. Okay. So that's just the first opening hour of this session. Here's our high of it and our low of it. After this gets formed, we would like to see either the high or the low get swept and price turn around to come back into Asia, maybe even touch lows if it doesn't just fill inside of Asia and turn around and continue upwards. Or like I said, just going to take out the high, come and take out the low, could break below the low, retest, and continue down that way. Or we could come down from the high and then just stay inside of this big imbalance like we're doing right now. So this is very important with these kill zones. From the high or the low sweep, we're either going to, like I said, return back into the kill zone or we're going to trade away from it, either direction. So with this sweep here, say you didn't catch this move, but you still want to get in the sell, but you don't know where this is going to retrace at, and you aren't quite sure where to take the trade to, like the target for it. So from here, I'm going to do it on the 15 and then just scale into the 5 because it'll look a little better on the 5 and the 3 minute, but you can still see it on the 15 here. Here's our swing high and our swing low. Or actually, it's right here, right? So here to here before this move retraces. So I'm going to take this Fibonacci retracement tool. I'm going to click the high first, and then I'm going to click the low. I have the standard deviation set, so let me change it. Show you my settings too. Screenshot this real quick. Obviously, you can change a couple of things around. Colors don't have to match up just like mine. Right? Okay. So then I have this from the high to the low now of this sweep here after we took out the first hour of Asia. So I'm just going to, you could just drag it out, but I have the magnet on, so it's going to kind of stick to the other candles. So just click it out. Now, what do you know? From this high to this low, where do we go and pull back to? Our golden target, the 0.618. So each of these Fibs targets, you learn about them. I'm not necessarily an ICT trader, but I do use concepts taught by ICT, and he's not the only person who teaches these levels and all that type of stuff. Like I've learned these levels from just like basic Forex trading information that you find on the internet. Your golden Fibonacci zones and all that, your Fibonacci ratios. These are some of your key levels. 0.618 for sure. 0.79 and 0.705 are two other really good ones, but 0.618 usually always gets smashed or tapped off of. And then look at this rejection that we have off of this. If you would have sold this, this would have been your entry. I'll show you how we catch the entry here, but around here would have been your entry to sell this off. And then what do you know? We go and tap our first target right here at negative 0.27. This will always be our first Fibonacci target. We will usually see some type of rejection here, and then, you know, pull back. We're pulling back into this bearish imbalance. If we reject off of this, then we're going to come back down, take Asia lows. That if you don't have Fibs, session highs and lows will be your targets. Okay, so where is this next target at? What do you know? It's right around our Asia low. So if we have two confluences for a target here, that's a high probability that we're going to come back down to this area if we keep selling, right? So if we reject off of this, why would we not continue down to 7205? You know what I'm saying? And then if we smash through this area, we have clear support here, right? If we smash through the 0.618, where are we going? The 0.1 or the negative 1, sorry. And look at what the -1 matches up with. This bullish imbalance that has not been tapped into yet, right? So there's still a bunch of draws on liquidity down here. This one, these lows down here that caused the push up during New York. So see how we have this clear rejection off of this imbalance now? Doji candle, that's a good reversal candle. What do you know? We're dropping. You know what I'm saying? Tapping the negative 0.27 target again. And we're going to just see if we break below this time, right? Still inside of this big 15-minute imbalance. Also, one thing we need to remember, that we need to break past this. See how no bodies have closed past this yet? We want this one to be the one to do it. Save this to the current interval real quick, and we'll go down to the 5. Now that we have our fib plotted from our high to our low, we have the retracement, we have our first target smashed, we have our second targets nearing here. So let me go to the 5. And a lot of the times I like to trade on the 3 over the 5 just because it's a little closer to the 1, but it's not exactly like as choppy or noisy as the 1. You can see the sweep here much better. This bullish candle pushes us up just to sweep us and bring us right back down, right? So that's why I took this swing high here to the swing low here to see where we were going to pull back to. What do you know? We pull back right to the 0.705 area on the 5-minute, and we also have a bearish imbalance here that we tap right into perfectly and immediately drop. Okay. So then another thing to kind of confirm this is look for IFVG in this same area. So we have one on the 5-minute here. This would be your, if you don't catch the top wick right here, then this would be your entry confirmation, this inverse fair value gap. So once this candle closed below this, this is when you would enter on the next one. And we're now below EMAs, below VWAP, clearly bearish momentum. This pullback kept us right below 9 EMA. This is my 9 EMA, 12 EMA, basically the same shit. Pulled back down, or pulled back into the 15-minute imbalance, remember? Respected it. Having trouble breaking this though, right? So that's what we need to watch out for. This is our next target when we need to get past, like 7205 or 7207 in order to get down to our Asia lows, obviously. So we just got to wait and see what happens at this area. Also, another thing, I'm not going to go over this here, but we have our 4-hour candle here. I just have this here so I can always see what the 4-hour candle looks like and see when the high and the low is being put in. So we opened right here, right? Put the low in immediately, pushed up to put the high in. Now we're trying to see if we can continue down with this momentum that we've been having. 4-hour over here on my right side. We can see our last 4-hour candle had a very big top wick. So this could start to turn around and start to bend. You know, when the trend bends, it's no longer your friend, technically. That's what they say. If you're in a buy and the trend is bending, you know, you might want to think about taking some profits or looking at this as a turnaround or whatever. You know what I'm saying? So, yeah, so we're on the 3-minute now. Like I said, I like this a little bit better than the 5 just because you can see like more imbalances. I like to have 3-minute IFVGs because they tend to hit. This is a 3-minute bearish fair value gap that got respected. Same one I was talking about on the 15. It's the same exact area. Change this real quick. So yeah, like once you get your 15-min fib plotted, you just make sure you want to, how I do it, I manage the trade on like the 3-minute or the 1-minute sometimes, or even the 5-minute. You're going to see if we can't break this 0.27, negative 0.27. If not, then, this is our support area kind of. So I do see it breaking this eventually. Unless it just really holds this. I don't know. I kind of want to just see Asia lows get swept. It's like the thing that makes sense most to me right now. It's just taking out these targets right here. 7205 is like ideal for me. Tap into this fucking imbalance again, and then we're good for a potential bounce back up after now sweeping and taking our lows, holding at our support. You know, we'll just see what happens once we get down to this area. See if we even come down and tap this -1. I would love to see this -1 get tapped actually, because like I said, on the 15, there's that unfilled imbalance here, unmitigated. And then that would just give us kind of like take this liquidity sitting right here to give us the fuel for the move up again. But you know, you wouldn't get in this trade down here. You know, you would get in up at the fibs, the fib targets. You wouldn't wait until we're all the way down here already. You know, just because the likelihood now of this trend dropping, or of this trade dropping more, is just less likely than it was from up here. You know what I'm saying? So that's how I would plot the Fibonacci. I'll also show you a little standard deviation real quick, just because it'll help show you targets too. So I said plot it on the manipulation, right? So what is the manipulation here? The manipulation would be this buy up, sweeping, and then immediately coming right back down, right? So this manipulation, impulsive, but the distribution back down is just as impulsive, right? So that's how you know this little move right here was manipulation, tricking buyers, you know, to continue the buy. Oh, yep, we're going to break past Asia highs. Let's just keep buying, psych. You know what I'm saying? So that's the manipulation. So we're going to take the Fibonacci retracement again. And I'm going to show you how I plot this. I plot it from the high to the low for the standard deviation. And then I change it to standard deviation. And then I'll drag this out a little bit. Show you my settings too for this. These are your targets here, the negatives, and then these are kind of just like a Fibonacci retracement, but we're gonna keep them in the standard deviation to see, because price will usually pull back to this area once you, right after you plot it, or even in the future, price will return back to these targets right here after smashing a negative target. So I don't think I have any examples right now, but you'll see if you kind of just back test these on this same type of move right here, right? You'll just look for this manipulation at the kill zone, high or low, right? That's clear manipulation. Or if you know PO3s, you'll look for the accumulation. Like this isn't a PO3 right here, but if you find a PO3, you'll plot the standard deviation on the, say, low to the high of the manipulation, or high to the low of the manipulation. So here, boom, low to the high, here's our manipulation. Where are we going to take this trade now if we're going to be selling here? First, we're going to look for our pullback, probably. Don't always have to have one, but we do pull right back around to the 0.5 area. So we kind of have a, I don't know, it's not down here actually. So we just pull right back to this 0.5 area, show that we're going to hold below these levels, hold below bearish imbalance, multiple confluences basically. Until we get our inversion, melt, pull back again, respect EMAs, respect imbalance. Now, what do you know? Where are our first targets at? Right around where our Fibonacci target was just at that I plotted, right? Let's just plot it back in there. Might as well. Draw the Fibonacci out again. So boom. Fibonacci target is in the same target as imbalance. So see, you have 1, 2, 3, 4 different targets right here, basically, all right in the same area. So we're going to average around targeting in this area. You know what I'm saying? 7204, 7205. I'm taking anything that comes around here. You know what I'm saying? Anything that if it hits here, that's cool. You know, my trade played out how I expected it to. And then I have also lower standard deviation targets if we continue to move lower. And then what do you know? They line up right with the -2 of my fib targets. -4 lines up with another untouched imbalance. What else on the higher time frames? Like you got to keep searching the time frames and seeing what else is lining up. All these lining up right here with the POC. So we're clearly going to probably come back down and smash this area. If we reject this area, we're going to buy off of it. But if we break it, we're going to come down to here. So that's how I would find my targets with these types of moves. And, every move is going to be different. I'll try to find a gold example here. Let's see, I had this right here earlier. Seems to have played out well. So I'm just going to drag it out a little bit. You can see I clearly had this plotted from this low to this high to show us where this move is going to pull back to, right? I also like to keep IFVGs from the past because they will like to get respected in the future. So what do you know what happens right here? We have okay, so we're coming down, pull back into this imbalance. This is why I have this here. So we're aware. Come down even further. Here's our lows, here's our support. We want to go and push back up above this imbalance now. So once we inverse this, finally go and inverse this, right? After all the bullshitting, inverse this. So I'm going to plot this fib here now from this low to this high. I want to see where this is going to pull back to. Pulls right back down to the 0.5. Also right back down to this IFVG. Wicks right off of it. We get another retest of the 0.5, but really we're clearly holding price candle bodies above the 0.382, right? So we clearly have a lot of support here. So I would test a buy right around here after we just wicked off of this 0.5 and took out some of these lows, right? It's really choppy. It's a test buy. You know what I'm saying? I wouldn't just yeet my whole account into a trade like this, but I would definitely test this. So then just one, because we already inversed this, pull back to the IFVG is a great sign that we're going to continue up and stay above it, right? Also, our fib confluence, all that shit. And then once we break above this one, that's how we know that we're really most likely going to be gone. All right, so once we do break above this one, all the accumulation and bullshit, boom, here's our first fib target, smashed, right? Like I said, with the first one, we'll usually see a little pullback. What happens? We get a wick, pull back, right into 15-minute imbalance, continuation. Smash the next target. We don't quite take out one because we do have a lot of, we already did take out our draw on liquidity, which was this right here. Wicked it perfectly, right? What is this? It's on the wrong time frame, but I'm pretty sure this is a 5-minute imbalance because there's not one on the 15 here. So we'll go to the 5 and see what's up. But that's why we didn't fully take out the 1, because we rejected off of this. So, boom, move down from there. This is your, this is when Asia opened. We got our push. You would have taken profits right here from your 695. This is a 20-point move. You know what I'm saying? And then let's just scale in some more. So yeah, same move on lower time frames here. You can see this fair value gap held. This would have been a great buy off of here if you were aggressive with it. You know what I'm saying? But if you missed this and had to wait, you wouldn't have got in on all this chop. Even though some of you might, because you see the bounce off the fib, but I really wanted to see it kind of come into here and fill a little more. So then that's why this was a lot more better of a confluence to me after we go and sweep these lows, tap the 5. We also have a little imbalance here that we break, right? Pull back once more, and then we're gone. Here's the 5-minute IFVG because it was a bearish imbalance. Pullback got respected multiple times until we melted from it. And then we go and tap it again in the future. Boom, that creates our Asia high. Where do we see another bullish imbalance? Right there. So then if that gets broken past and inversed, we're going to think, okay, we're probably going to start selling from this. What do we know? We break past, pull back to it. This would be your sign to sell. Little less aggressive would be once we get under VWAP and EMAs. It's a little more clear to see that, okay, yep, we're downtrending, so that's that. That's how I would have caught that. Let's see. Let's even plot a fib here, just because from our high to our low again. Where do we pull back to? Right to the 0.382. Where are we also at? A VWAP and also a 5-minute bearish imbalance. Two other confluences along with the fib right here to tell you to get into a sell, right? Where are we going to take it to? Negative 0.27. This is our first target. This is our clear support that we just had. So here's your first target, obviously, right? Where are we going to take it to? If that smashes, look at we don't reject this time. We just smash right through and take out the negative 0.618. Where are we at right here though? In this same area. It does break it, right? Because it does go and sweep our London lows finally, which never actually got swept here. So definitely would have been expecting gold from up here to definitely come down into this area again, because this little gray area is my support that I've had for a minute. So watch, I'll show you like the 1 hour. Support. You know what I'm saying? Clearly, once we rejected off this like that, we were going to come back down to here. Also, higher time frame fibs, way more killer, to be honest. They just hold more weight, kind of. So just like anything else on the higher time frame. So what do we do here? We plot our high, our low to right here. Where is this going to pull back to? Pulls right back to the 0.5, wicks off of it. Now we are selling. Where's our target? Negative 0.27 right here. Does this line up with anything in the past? That is the important thing. There is a little bottom of a wick right here at the same exact area. So do we think the gold is going to break this big support that we've been holding and come back down here and come down here to these lower targets? That's the question. Are we gonna force the trade to come down to here? No. But if it's showing us that we're going to break down through here, then these are our targets right here, right? But expect a rejection for gold off of this. I'm not saying it's guaranteed, but just, look at how many times it's happened. Right now could be the one that smashes us through, right? This right here that I just drew out was a 15-minute imbalance, or IFVG, sorry. From this cell here. Actually, is this a... Yeah, no, it's an IFVG. From this cell here, we inversed, and then I drew it out just because, like I said, we reacted off of this area clearly a bunch in the future. So just right now for gold, looking to see if we reject off of this again. We have our 4-hour candle that just opened 50 minutes ago. Put in the high for it. Would not doubt that this will keep going over the future, over the next 4 hours, over the next sessions. You know what I'm saying? So, yeah. That is basically how I would use fibs. I try to just keep it kind of simple. It's not really a crazy, theory or anything. It's just, if you know about the Fibonacci and the whole Fibonacci spiral, you kind of can put together why this would make sense with the algorithm and the mathematical charts and all that shit. It's just like a sequence, and all trading is math and algorithms and shit. So this is a really killer tool to know how to use and know when to use and where to use it. Because like I said, I plot this right here. I know exactly where this is going to pull back to, and I know where I should take it to. I plot this right here. I know where this is going to pull back to and where I should take it to. Especially with my higher time frame ones, like you can plot them. It don't matter the time frame. Plot them on the 4-hour. Plot them on whatever. Like as long as you have a clear area to plot it, though. Like let's try to find like some less mess right here, real quick, to where we can plot a good higher time frame Fibonacci. Because this has just all been, Usually, it's the best because this is how I caught this whole gold buy actually over the beginning of the year. I'll show you how I did that. Was using Fibonacci's because when we're in uncharted territories, you're like, okay, well, where are we going to target, right? You know, you don't know where to target. We're at all-time highs. We don't have any past draws on liquidity or nothing like that. So where are we going to target? So this is how I would know where to target during this whole bull run over the beginning of the year. I'll take it from the swing low. You could even take it to the swing high right here if you wanted to. You know what I'm saying? Where do we bounce off of? Look at swing low, swing high. Where do we bounce off of? 0.705 perfectly. Where do we go? Take out the negative 0.27. Smash it. Where do we go? Negative 618. Smash it. Pull back. Continue. Smash this target. We're going to plot another fib here from this one that we just had the target at to this next high. Okay. Where are we going to go? Where are we pulling back to? Retracing 0.5 of this move here. Okay. Where are we taking it? Negative 27 smashed. Negative 618 smashed. These next targets, oops. Once we pull back again, smash. So look, what am I going to do again? I'm going to plot another fib from here to here because this is our highest point of this move before we pull back here. Move it over, move it over. Clear rejection off of this, 0.382, and we're also not breaking this imbalance at all. Right? This is what's holding us up. Do it again. Where's our swing low at this move? Right there. Where's our swing high? Yeah, you could say right here, but this shit didn't pull back at all. It just accumulated. So we're going to put it up here. All right? Because this is our next swing high. Where does it pull back to? Damn near taps the 0.382 perfectly. But what does it also do? More importantly, holds inside imbalance at the same time. Right? We need these imbalances to be held and not broken through. If they get mitigated through with candle body, not just wick, I want to see candle body close through, then this is in inverse. But in order for this trend to stay strong and stay bullish, we need these to hold. Watch, one more. Keep doing it. From this swing low to this high. Doesn't even pull back into fib, but what does it do? So we're going to delete fib. What does it do? Where does it go? Imbalance. There's also another one right here that the body doesn't break past, right? Boom. Clear, very, very strong bullish momentum. Let's see if we can plot another fib here. Because this one gave us a little more of a pullback, right? Or more of a retracement. Where do we stop? Where do we stop at? Body does not close past 0.5 of this fib. Body stays inside of this imbalance. Once again, same thing that's happened right here. Let's do it again. Actually, we might not be now because we're at the top of our trend here. Look at all of our targets are getting smashed. This target, -2. What happened? Look at it. It took out the -2 perfectly. Okay? It didn't go 1.1 point higher than this -2 right here. This is exactly how you would use these Fibonacci targets. Would I plot another fib from here to here? I would try, but once I see that we completely close past the fib, that's when I'm going to think, oh shit, change of character's changing. Let's try to, we gotta adjust now because what I was just doing before is not working anymore, right? We are no longer holding. We had a big ass rejection wick off of it, right? To trick buyers into think that, yep, we're just going to bounce right off and keep going again, right? No, we don't break past this 4-hour imbalance. Big rejection off of it. Melts past all of my fib targets, melts past my first imbalance that started this move up. Very important right here. This first imbalance that started this move up, if this gets inversed, we're gone. We're gone. We're taking all of this past liquidity. All of this is drawing liquidity for sellers. So once this shit got broken, gone, right? Melted 700, 800 points. You know what I mean? Sorry, I'm stupid. That's 600 points. 700 points. So that's not Fibonacci, but that is how you would see that this is an invalid Fibonacci now. Not every Fibonacci is going to just work perfectly every time. Sometimes you will get this invalid Fibonacci, but that's just because this was clearly the change of the character here. Now, once you look in the future, this is when gold started to sell. All right. So that was a little longer than I expected it to, but it's all good. Hope you're able to pick up on some of what I put down and that I explained it kind of clearly. If you need help with anything, bro, anybody can DM me for real, like with a question. And I'll do one-on-ones with you for a few minutes too. Shit ain't nothing, like. But yeah, take this down. Make sure you got the settings and shit, and start back testing, because you will not understand this if you don't go and back test it, and also obviously forward test. But in order to know how to forward test it correctly, you have to back test it. Let's see what MES is doing. Still holding here, bullshitting right at this area, not trying to take out our Asia lows. But the good thing is we broke below the negative 27 fib. So we broke below that, had a nice good candle to get us below that, created a bearish imbalance that we pulled back into, are respecting now. Boom, here we are. Let's see if we smash all this now. I'll stay on the video just to see if we smash this or not. Took out the imbalance, closed past it. This next candle, we'll see what it does. Right here at our target, right? We're basically at our target, you know what I'm saying? And when I trade, if it looks like my target is not going to get taken and the shit is going to turn around right at my target, I'll always close the trade. I'll always close a trade 80%, 90% of the way to my target. That's good enough for me, bro. I cannot always be right every single time. You know what I'm saying? Especially when the markets are acting like this and price action is kind of like this, MES looks definitely a lot better than gold has been, and been acting a lot better than it has been, but still. So look, boom. There's our sweep technically. This could be all we need for us to turn around. I'm gonna be real with you, but I'm not guaranteeing that right now, because I do want to see us come and take some more of this liquidity down here. But we'll see. But even if we do turn around here, boom, you take your profits. You know what I'm saying? This was because if you would have just caught this move, you would have just caught 220 to 205. That's 15 points. You know what I'm saying? That's a one or two of those trades a day, you're good. So yeah, man, that's basically how I would do this. Nothing too crazy. Really, just this is one of those things you need to go and back test, forward test, in order to really lock it in. But yeah, man, like I said, got any questions, hit me up.